Gold stayed range bound yesterday, expected 1991 and mentioned 1991 as a greater resistance. It has proven out to be a greater resistance. On the downside, 1980 yet again proven to be a greater support for the day. Now, what to expect today from gold? Important day again when we have the non-farm payrolls data coming in from US later in the day, few hours from now. Thus, how to trade gold today with the news, which position you should take in order to profit, we will see with the help of charts and indicators. This is the first update for the day. The next update will be released before the US session, before the NFP data. Watch that as well. Thus, if you're not subscribed to the channel, subscribe to the channel, press the bell icon or join my free Telegram channel to get the live updates. Let's start. First, we look into hourly. If you look at hourly chart, see what is happening here is higher lows are consistently seen and lower highs are seen. So this is consolidation here. After the drop, consolidation undergoing here. A breakout is what you should look for on the upside or downside, either which way is 1991 and 1978 zone. It has to get out of this zone in order to confirm a breakout. Right now, it is very much stationed, very much positioned within these levels. If you look at the hourly chart, see what is happening here, the rise, the retracement higher lows, the rise again and lower highs this time. So once it breaks out on the upside, certainly you can say that a little direction is observed. And if you draw a parallel from here, you can observe the highs could be at around 95, 96 zone. There is a probability that it could try to achieve this zone even if it has to reverse. And if it breaks past this zone at 96, you can say that certainly it can achieve further highs towards 2002. Now, if you look at a stochastic, this is comfortable here, neither bullish nor bearish. MACD is also flat, while RSI is trying to trade with slight bearish bias. Coming to similar observation on the 2-hour charts, couple of red candles, then a greener one, then a retracement, and then this breakout. So yes, it is trying to move up. Let's see if the next candle further is a further greener candle which can try to lift the prices up. Any move beyond 1991 is where we can confirm that the prices are turning bullish. Then we can look forward to 95, 96 zone as the first targets here. Stochastic rising, MACD. Now see, drop, retracement. When the drop is sharp, the retracement is gradual, suggests that it could further converge crossover for sell. There is a probability to it, but then these are markets. A reversal is what I will look forward to. If it continues to diverge from here, more bullishness may prevail. RSI looking upwards, suggestive of bullishness. Coming to 3. Now here on 3-hour charts as well, see very clear consolidation. Thus a breakout is what one should wait for. Now look at the preceding candle here on the 3-hour charts. What it has done? Higher highs, lower lows. And despite the swing, it appears the zone between 78 to 91 is going to remain critical for gold here. Only once it breaks out on the upside, you can confirm that the prices have reversed, else it is still going to trade with or consolidate more here. If you look at stochastic, this is rising. The MACD, look at MACD here. See the drop, retracement, drop, retracement. And it suggests that it is still trading with a gradual bearishness here. And this, thus we have to wait for a clear breakout which could give us a direction, that which direction it wants to take. Now if you look at this formation here on MACD, suggests that a reversal from here may bring massive bullishness here. RSI comfortable. Coming to 4-hour. Likewise on the 4-hour chart, see one red candle, double bottom and couple of greener candles suggest that still there is slight bullishness, but it is very much shy of breaking. So again and again in every chart, it is very much evident that a breakout is what one should look forward to. Those who want to take the advantage of smaller movements can even sell here at 83.5 and buy at 91. Yes, below 83.5, again 1980 is going to be a greater support. We will look further into detail. See, stochastic is rising here. MACD is almost at the verge of a convergence and a crossover. It is not yet crossed over. If you look at the formation, see, this is done. And if you connect this, you will find and draw a parallel, you will find this is almost the bottom. There is a probability of reversal. RSI is staying flat. Coming to the day. Now see, there is a very interesting observation on the daily charts. And before we delve into detail of the charts here, if you want to learn this art of trading, you can join my mentorship batch. 27th batch is starting on 20th of November. Limited seats are available. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Also, you can register by visiting our platform forexfunda.com. And yes, there is a live webinar coming up this Sunday where we are going to discuss the moves of the market in the coming week, and we are going to discuss day wise what can be expected specifically on Monday, Tuesday, and then forthcoming days for gold, silver, and major global markets and commodities. Thus, register for the webinar. The links are there in the channel and video description. This is the platform forexfunda.com. You can register by clicking on the links here on the front page itself. Be it the batch, be it the webinar. This platform is created with a vision to provide see live tickers, live stories or news. The economic calendar, the charts, you can create your own charts. You can find out the favorite instrument. You can find out the live prices and do the charting. You can book a call, and there is a discussion forum where you can discuss with the like-minded. Thus visit the platform forexfunda.com. Now, if you look at the daily charts, three red candles, a swing candle, and then a reversal sign. Yes, this could be the reversal sign. This was an indecision candle here. But the reversal sign is confirmation is only once it breaks past 91 and then 95 levels. If these two levels are taken, you can look forward to a massive rise in gold from here, which can take it till towards 2002 and 2008. In fact, it can rise further beyond 2008 as well. So we have to wait for a breakout first above 91 and then 95-96 zone. These two levels needs to be breached. Beyond that, just stay long. It is not going to reverse today. It is going to fly high. That is the first part. Second point is see the divergence of the price from the 20 period moving average. Now the 20 period moving average sitting at around 1962-64 levels, which is going to remain a major support, and below that 50 and 100 at around 1930 levels, the next major support. See, too much of divergence of the price from the moving average calls for it to converge a bit, but it is just consolidating, not willing to drop further. That is an important sign that bullishness is there and prices are not willing to. However, once you see the prices staying below 1980, 1978 zone, just stay short. We are looking forward to 1970, 1964, 65, and then 1960 levels. Yes, it can give you major drop here because this is a breakout. And right now it is not giving any clear hint that which direction it is going to be. Right now, the gap between the 20 and period moving average and the prices suggests that it could be a downtrend too. The see couple of indications here. The downtrend, then a reversal sign suggests it could reverse, but it has to break on the upside. At the same time, this could be consolidation and a continuation of the previous trend is still there. Thus, we have to respect the levels today, nothing beyond, nothing more. Stochastic has dropped. Now look at MACD. This is interesting. The crossover in MACD is coming at a higher levels here. If you look at the recent crossover, you can see this recent crossovers in gold. This suggests that the downtrend or a breakout on the downside cannot be denied here because this crossover is coming at a higher level. And this is preceded by a stronger rally here. So, or also if you look at it, it just crossed over, it is just turning red. So possibility exists that a breakout on the downside could be seen where the prices for next few days could stay bearish. RSI was overbought, it has cooled down. Thus, on the daily charts, it suggests that the MACD and indications RSI suggest that there could be a break on the downside, and the candles are suggesting that it could reverse. And that is why I say we have to stay cautious. On the upside, one can buy here at 1991, expect 1995-96 as the first target, and then 2002 as the next target. Yes, this zone between I have always maintained 98 and 2002 is a greater resistance. We have to watch out how it behaves around those levels. And specifically 91 and 96 levels are going to remain critical for the day. On the downside, I will recommend you to sell here at 1983.5, but then 1978-80 zone is the very strong support zone for the day. Below 78, do not think of selling, do not think of buying gold. It is going to crash further towards 1970 and 1964-1960 zone. The drop could be equally strong here. So take your trades accordingly. Trade with the stop loss and a trailing stop loss. Like, share, subscribe, and comment. Join my mentorship batch. Join my signals channel. Join my free Telegram channel. Reach out to me for any of your trading or training queries. And yes, do not miss to register for the webinar starting this Sunday, where we are going to conduct every week a review for the markets coming week. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading day. See you again before the NFP data. Do watch that as well. Thank you.